Hello everyone. Today in this video we are going to continue part 2 of product costing. So let us continue the video. So we start this video with logistics master data. The key to understanding costing with quantity structure is to gain a complete understanding of logistics master data. As with the material master settings discussed in the cost estimate without quantity structure section, numerous settings exist under each master data tab and not all are relevant to product costing. So we have a tip here. The master data discussed in this section is integral to product costing, but often the cost accounts don't own the master data. Master data settings are directly linked to strategies defined in the relevant costing variant. Different costing variants may look at different settings in the master data depending on the intended use of the costing variant. So the first master data is bill of material. So a bill of material, normally called as BOM, provides a material list with quantities. A costing variant provides details about valuing those materials. The BOM contains the following details that will impact costing. Header. The BOM header includes details applicable to all items listed in the BOM, identifying the following. Base quantity. All quantities in the BOM items are extended by to this quantity. Usage. BOMs that can be defined for many different uses. The system will first look for a BOM specifically as shown in figure. BOM usage. If a costing BOM is not available, a production BOM could be used. Costing usage with plus sign indicates this is default BOM for costing. In the absence of plus sign, then any BOM with a period sign can be used for costing, and a minus sign indicates the BOM is invalid for costing. Status identifies if the BOM status currently valid for costing. Validity period. When can the data be read? Lot size. Relevant quantity for costing. Fixed costs are applied to the total lot size. So items. So BOMs in SAP are built one level at a time and then connected to complete a structure. Each level of BOM is assigned a costing level. Levels are used to build a sequence to determine costs starting from lower level items to the top final item. The item details shown in the figure BOM items are the first level below the material in the header. An item with the ASM indicator set is a lower level BOM item. Item category. BOM items are assigned to an item category as shown in the figure BOM item categories. The category dictates whether the item is a material managed as stock or other details for manufacturing. L items are stock materials and available for costings. N items are non-stock items procured at the time of manufacturing and available for costing. The details will be different depending on the item category. The L category contains the most prevalent items used in a BOM. This category contains information on how the item will be used in manufacturing. N or non-stock items are less prevalent and contain information how to procure the item. Categories not relevant for costing will be ignored when creating a cost estimate. The item detail view shown in figure 5.23 specifies all the data for one BOM item. Some settings seen at the BOM item level can also be defined in the material master. Settings made in the material master become global settings relevant for all BOM items for that material. Settings made at the BOM level only apply to the specific BOM item. The key item detail fields that impact costing include the following. Quantity. Quantity of item required to make the base quantity in the header. Item category defines the type of item and dictates how it impacts manufacturing. Assembly indicator. Low level items. Costing relevancy determines if an item will be available for costing. Validity date that item will be valid for usage. Scrap planned scrap amount. Scrap will only be applied to this item. Bulk items of small value visible to manufacturing but ignored by costing. Bulk can also be defined in the material master. Phantom items needed by manufacturing but ignored by costing can be set in the material master through the special procurement key. So this BOM item categories. I think I need to put the other figure here. Let me do that. So if we see in this page, the item detail view shown in figure 5.23 specifies all the data for one BOM item. Some settings seen at the BOM item level can also be defined in the material master. So here if we see, this is the material, plant and alternative BOM item category, BOM item details. All the data for one BOM item. Some settings seen at the BOM item level can also be defined in the material master. Settings made in the material master become global settings relevant for all BOM items for that material. Settings made at the BOM level only apply to the specific BOM item. So this is the one. And routing. Now let us see the routing. The routing is a sequence of steps required to convert a material. These steps called operations detail the quantity of time, type of work and the work center where the processing will be executed. The sequence of steps identifies the order the system should be executed. The routing header has similar settings to the BOM header. An operation contains individual labor steps to convert the material. These labor steps could be defined as internally executed by manufacturing or externally executed by a vendor. You can also include operation items that are not relevant for costing. Let us take a closer look at the structure of a routing as follows. Header. The routing header has similar information to the BOM header. The routing header identifies the material and plant for processing and provides information verifying the availability of the routing. The routing header details the following: usage, business process that can access the routing; status, release of the routing for process use; lot size range, production lot size valid for the routing; validity period, date the routing can be accessed. Operations. Operations represent individual packets of work. The number of operations in a routing depends on the extent of processing required. The operations shown in figure 5.2 provide the time quantity for costing structure. Operations. So these are all the different operations, and this is the work center and this is the plant. And once the material goes through all these operations, it will be a finished product. So that will be a different material. Each operation contains a control key. The control key identifies the processes available for each operation. Details in an operation as well as the control key as shown in figure 5.25 could be relevant to costing. The system will ignore any operations not relevant for costing, but these operations could still be valid for manufacturing processes. Operations detail the following: base quantity, quantity output per processing time; standard time value, time fields represent the time value for the base quantity; 6 time fields are available in the operation; work center assignment, location or resource where the work occurs; material assignment, step where materials in the BOM will be consumed; control key, identify that controls how the operation will be processed; scrap percentage for output to the next step; relevancy for costing, operation is valid for costing; assignment of activity type, activity time linked to cost center in the operation work center. So this is the control key: PM03, PM05, PP01, PP03, scheduling, cost, print confirmation, print time tickets. This is a very detailed screen which will be useful for routing. Control key confirmations. The formula contains the following parameters: machine, operation quantity and base quantity, and we can see in the formula it is machine multiplied with operation quantity and divided with base quantity. And labor valuation, the value of labor, the operation price, is determined by the activity type designated in the operation time field and the relevant cost center visible in the work center shown in the figure 5.26. So relevant cost center visible in the cost center. Activity types and planned prices were discussed in our previous video in cost center planning in the context of cost center accounting. Once defined, a planned price can be applied to an operation. To calculate the labor operation value, use the following formula: It's like costing lot size divided by operation base quantity, and with the work center performance efficiency multiplied with operation time and multiplied with activity type price, which is an operation price. So let us consider the following example. Operation time is 10 minutes. Operation base quantity is 1 piece per 10 minutes. Costing lot size is 10 pieces. Activity type price is $30 per hour. Work center performance efficiency is 95%. Your formula would look like the following: 10 pieces per 1 piece divided by 0.95 into operation time is 10 minutes, again into activity type price $30 per 60 minutes. So resulting $52.63 as your operation price. So this labor calculation will be calculated based on these factors. So production version. Manufacturing can produce products with different procurement alternatives. To control material planning, manufacturing can dictate a specific BOM, routing and lot size to apply to individual production processes. These individual production processes are called production versions. Each production version contains a specific BOM, routing and lot size. A production version can be used in costing to specify the quantity structure for costing. So determine quantity structure. The system follows a precise sequence to determine the quantity structure. The system may discover a valid structure, but the structure must also be valid for the costing dates and the costing lot size. The system may discover a valid structure, but the structure must also be valid for the costing dates and costing lot size. If costing can't find a valid quantity structure in a step, the system will go on to subsequent steps. If the system still can't find a valid structure, an error message will be issued. Each step identifies where the data is specified. The BOM selection process is as follows. Manually create a single cost estimate by entering the BOM or production version in the cost estimate parameters. Identify the special procurement key in MRP2 tab of the material master. Determine appropriate alternatives and follows the relevant master data. Identify the special procurement key in MRP2 tab of the material master. Determine appropriate alternatives and follows the relevant master data. Maintain the production version in the MRP4 tab of the material master. This setting reads the production version for manufacturing with valid dates and lot sizes. Follow the menu path material costing with quantity structure, costing variant components. Define quantity structure control and select a BOM application to override the current selection and send the system back to master data settings for further analysis. Maintain the following fields as shown in this figure. So it's like selection ID. This setting will be defined in the next step if it points to a table that has a priority to define the BOM selection. This setting is determined via the following methods. This selection first sends the system back to the material master to evaluate the individual or collection field in the MRP4 tab. If it is set to 1, the material is make to order and it uses the order BOM as shown earlier in the figure. If the setting is not 1, then the system goes to the production configuration, BOMs, define alternative determination for multiple BOMs and uses the selection Production versions. This selection points to the selection method field in the MRP4 tab of the Material Master. The settings can be as follows. Production version is optional. If no valid production version is available, this goes on with selection choices. Production version is mandatory. If there is no valid production version, an error is issued. Minimum BOM status requirements. This setting identifies a minimum BOM status in the master data that is available for costing. Follow the menu path material costing with quantity structures. Settings for quantity structure control BOM selection. Check BOM selection. Transaction OPJI. Select the quantity structure control defined in the quantity structure tab of the costing variant. This table allows you to define a priority for selecting different BOM usages to determine a costing BOM. The settings are as follows. Cell ID, cell peer. The system looks for the selection ID identified in the previous step. Once an ID is found, it follows the priority to determine the appropriate usage. BOM usage. The system follows the priority to find a valid BOM. Valid BOM uses to use for costing. If a valid BOM with valid dates, status and quantity has not been found, then the system issues an error message. So BOM selection override settings, BOM application selection ID, override alternative selection from material master. The routing process is less complicated than the BOM, but it is still necessary to find a routing for a valid status, valid costing lot size, and valid costing dates. The routing selection process is as follows. Manually create a single cost estimate by manually entering the routing or production version in the cost estimate parameters. Identify the special procurement key in the MRP2 tab of the Material Master as shown previously in figure 5.14. Determine appropriate alternatives and follow the relevant master data. Determine a production version from the MRP4 tab in the Material Master. The system first reads the selection method field in the MRP4 tab of the Material Master. The settings can be as follows. 2. Production version is optional. 3. Production version is mandatory. In optional, if no valid production version is available, goes on with selection choices. If production version is mandatory, if there is no valid production version, an error is issued. Set the costing, routing or production version in the costing 1 tab in the Material Master using the costing quantity structure. Set the priority of routing types to determine a routing from existing manufacturing data by following the menu path. Material costing with quantity structures. Settings for quantity structure control. Routing selection. Check automatic routing selection. The settings are as follows. So ID selection priority task list type usage. In ID select the ID defined in the quantity structure tab of the costing variant. Selection priority defines the order for selecting a routing. In task list type key that classifies task lists are routing according to their functionality. Usage identifies a usage setting in a valid BOM. Set alternative sequences in manufacturing routing master data. If no routing is found with a valid status, a valid costing lot size or a valid costing date, the system will issue an error message. A cost estimate with quantity structure has several different views. These screens can be a little intimidating until you develop some experience navigating the screens. These screens contain all the relevant information for the results of costing as well as all details about the creation of cost estimate. These views are relevant to the material selected at the top of the screen as shown in the figure. Costing details. Costing details are contained in the tabs shown in the center of figure 5.30. The material and plant relevant to costing are contained in these details. The costing details view provides an overview of the details used in creating a cost estimate. The quantity structure, the costing configuration settings, the validity dates for master data, and the current use of the estimate. This view also displays the cost of goods manufactured, used for balance sheet material valuation, and the cost of goods sold, used for product profitability. These values are determined by the cost component split. The cost component split allows five separate values to be defined from cost components. So create material cost estimate with quantity structure, costing details, indented view. The indented view shows all the lower level materials in a cost estimate as shown in the figure. The default view contains only the materials list. In this view, you can activate routing and overhead details. This view includes the extended value of costing items as well as master data details. This view is the only one that shows the lower level details rolled into the costed materials. By creating screen variants, you can change the details shown in this view. Itemization view. The itemization view shown in figure 5.32 displays individual costing items including item category, resource, cost, element, total value, quantity, and material. Like the indented view, you can change this view using screen variants. The item category determines the type of costing details displayed. The costing item category was explained in the product cost planning basics section. So these are the two figures: create material cost estimate with quantity structure, itemization view, and this is an indented view. Cost component view. Two cost component views exist. The main view shown in figure 3 is the only one required by costing. Cost component view. An alternate view called primary or actual is available for additional costing detail. The cost component view is required for sending COGM or COGS details to COPA. This view is also the only one that keeps material, labor, and overhead separate throughout the costing structure. The views discussed earlier are created automatically based on the quantity structure and master data. In contrast, cost component views are defined by the organization. SAP provides a table with 40 different fields. Each variable and fixed value utilizes one field. Values are mapped to the component fields in configuration as previously shown in figure and described in the product cost planning configuration section. If a primary or auxiliary view is defined, you can toggle between the two views. Update prices. After a cost estimated is reviewed, you can save it for future reference or use it to set prices. As mentioned earlier in the cost estimate without quantity structure section, almost a dozen fields in the material master are available for material prices. To update a price field, the costing variant must identify the valid material master fields to update as shown previously. The cost estimate must use the variant that identifies the desired material master fields designated for a price update. At least one cost variant must be designated to update the standard price field. This field will be used for FI inventory valuation. The other price fields are optional and are available for alternate cost analysis. Prior to setting standard prices for a material, the marking allowance must be activated as shown in the figure. The marking allowance can be set in the individual price screen or in the costing run cockpit. As we will discuss in the costing run section, this allowance must be set for every period for each company code. The marking allowance setting can be changed until a standard material price has been released. The marking allowance identifies the costing variant and version that must be used to create cost estimates for standards. These cost estimates must still be activated for standards by performing a mark step and a release step, which we will discuss in the next section. So, costing will activate marking allowance. We have a note here: in an MM environment, you may handle many different types of materials. Costing is only relevant for valued materials. For valuated materials, you can use two different price controls: price control S and price control V. Remember from the material master discussion earlier in the chapter that in an SAP S4 HANA system, the material ledger indicator can be set to 2 or 3. Either price control S or V can be used only with the material ledger indicator. Material ledger indicator 2, material ledger indicator 3 always require price control S. S materials will use a frozen price to value inventory. This price can only be changed once per period. V items will be valued using an average price calculated by the system. Both material settings can generate a cost estimate, but V items will not value inventory from the cost estimate. Before you decide whether to use a standard cost estimate, you need to consider both its benefits and disadvantages. The advantages to using a standard cost estimate include the following: inventory valued at consistent price, variance captured in price difference account, variances are visible at material level, price changes can be monitored, price purchased and raw materials are based on known prices, overhead can be added for planning purposes, manufactured items are based on a BOM and routing, details can be provided to COPA, cost estimate details can be used to evaluate product changes. Here we have a warning: the process of releasing a standard cost estimate can occur only once per period. The system provides the ability to update a price, but doing so comes with risk. Before discussing updating a standard, we need to evaluate two price fields in the materials master. Under the current heading in costing 2 tab shown in figure 5.18, you will see two fields showing the same amount, but these fields do not contain identical data. The standard price field is the value used for inventory valuation. This value can be set manually through processes or through product costing. The second field, planned price, contains details from the cost estimate, including the cost component split used by COPA. The first option is to manually change the FI price for inventory through an price change. While FI is correct, a mismatch often occurs between FI and COPA, the latter of which receives data through the cost estimate component detail. The second alternative is to delete the current cost estimate and release a new cost estimate. However, during the resetting process, you run the risk of COPA not receiving any details. Cost estimates can also be used to set prices in other price fields. These alternative prices can be used for comparison or reporting procurement alternatives. This feature is controlled by settings in the costing variant configuration, which we discussed in the product cost planning configuration section. Costing run. An alternative to setting individual cost estimates and manually marking and releasing is to execute a casting run. Casting run parameters can be set to cast numerous materials simultaneously. The following list offers suggestions for setting the standards or the data that must be reviewed while preparing for a casting run. Verify the material master information is complete and up to date. Ensure that BOM on routing is correct. Choose the validity periods for prices and master data. Run the costing for raw materials level 1 to find lower level errors. Correct level 1 errors so they don't transfer to upper level materials. Repeat for subsequent costing levels. Use transfer control to find all items that need updated costs. Use error control to find items that need data updates. Designate a data SWAT team of master data owners to quickly review and resolve costing issues. Review standard reports to find valid cost estimates with unusual values. In the following sections, we will walk you through the steps to execute a costing run. Selection list. The first step to creating a costing run is to select materials for costing, for which there are two methods. A selection list transaction in the costing menu can be used to build there is a warning. Selecting the option of having the costing run select materials comes with limits. SAP automatically uses the selection criteria to build an SQL statement for the costing run program. If too many selection parameters are entered, the costing run will encounter a technical error because of character limits in SQL. Using the selection list will alleviate this restriction. So, creating a casting run. A casting run is executed from a casting run cockpit, which allows you to perform all required steps from one convenient location. General data must be entered and saved prior to executing any subsequent steps. The key setting in general data shown in figure are costing variant, costing version, controlling area, company code, and transfer control, which is optional. You must also select the costing, quantity structure, and valuation dates. You can choose a costing variant that will post results to the standard price field, or a variant that updates price fields other than standard. You can also set a frequency for regular costing runs. You cannot manually select quantity structure, it is determined automatically. Once you save the general data, you can begin the casting process. The steps in the casting run are executed in sequence. However, you can go back and re-execute previous steps if needed. So processing in each step in the casting run process requires the entry of the documents. The individual parameters are relevant for the specified step. Once a parameter is entered and saved, the execute icon will be available. These steps also create individual logs and error messages. Each steps can also be set to execute in the foreground or in the background. The following steps make up the casting run process. Selection that determines materials that will be processed in the casting run. In this step, you can manually enter criteria or use a selection list. Costing explode and cost levels of the quantity structure. You can execute this step by say specific costing level or select all levels. When a bomb is exploded, the lowest item in the structure is assigned to. Now let us see the processing. Each step in the casting run process requires the entry of parameters. The individual parameters are relevant for the specified step. Once a parameter is entered and saved, the execute icon will be available. These steps also create individual logs and error messages. Each step can also be set to execute in the foreground or in the background. The following steps make up the costing run process. Selection determines materials that will be processed in the costing run. In this step, you can manually enter criteria or use a selection list. Costing. Explode and cost levels of quantity structure. You can execute this step by a specific costing level or select all levels. When a bomb is exploded, the lowest item in the structure is assigned to level 1. The number of levels depends on the complexity of the bomb. Only costing individual levels assist with error management by reducing lower level errors from transferring to upper levels. This step can be set to cost all selections or only previous estimates with errors. Logging by costing level is beneficial when trying to trace errors. Analysis. Choose from several options to analyze the costing results. Some reports will give you an overview of all the materials and allow you to compare the new cost estimate to the current standard. Once a selection is saved, other options cannot be accessed during this step but can always be executed for the reporting area. The most often used report, which is shown in the figure, is a comparison of a current standard price and the future price. This step will also validate the informational revaluation in EFI. So, information costing value report, information revaluation in FI, material plant strategy, costing result, variance costing, total value. So marks all valid cost estimates. If the marking allowance is not set for the period, it can be saved in this setup. The marking setting can be done for cost estimates with a future date. Releases. Releases all valid cost estimates or post results to price fields based on the costing variant. Only cost estimates for the current period can be released. Each step of the costing run contains details about costing level, material overview, and analysis. The costing run cockpit executes programs that need to update details in the cockpit, so be sure to refresh often. Individual steps have a status indicator and a processing log. As the programs progress, you can verify their status by refreshing the screen. Error handling. Handling errors can be difficult since one problem can trigger multiple errors, especially when you are costing several levels simultaneously. As mentioned in the costing step, you can cost by level. This flexibility allows each level to be processed and corrected separately prior to moving to the next level. At a minimum, logging errors by level identifies the level where the error occurred. You can configure your own error messages to facilitate the correction process. Setting the user error message CK318 flag shown in the figure to red flags all cost estimates with errors, so you can recast these cost estimates. Once the message is set to error in the costing step of the costing run, set the indicator cost with errors only. During the costing run, the system only reads the cost materials that have an error. It will not recast everything using less system resources. So during the costing, the system only reads the cost materials that have an error. It will not recast everything until using less system resources. Costing run error management. user defined messages, material cost estimate. So a valid bill of material could not be found for material. So, warning, no easy guide exists for troubleshooting costing errors. The process requires experience. One error could cause several subsequent errors since many cost accountants do not own the master data. Correcting the sources of errors could be problematic. Having key master data owners available can simplify the process. Transfer control allows you to determine if a cost estimate will re-explode the quantity structure, and allows you to revalue the costing items with new prices, or transfer existing cost values to upper level costing items. Instructing the system to use existing data is more efficient and keeps current costing items frozen. Can be defined to only transfer within a plant or to transfer existing data across plants. The transfer control details contain a strategy to define valid costs estimate that can be transferred. For materials to receive costing details across plants, a special procurement key should be defined in the MRP2 tab shown earlier in the figure. This key indicates which plant is sending costing data. The special procurement key instructs the cost estimate to read data from supplying plants within the controlling area, and allows the cost estimate to build a quantity structure across plants. Once defined, a transfer control can be assigned to the costing variant. You can make a transfer control mandatory or allow users to remove it. The costing variant must also be updated with cross company code costing. If you want to transfer costs from plants in different company codes, you cannot transfer cost across controlling areas. So this is the part 2 of our product costing. I think I have covered all the information related to product costing. This is not that much easy. This is very complex module. I will try to do some practice on this product costing. So please wait for that video. Thank you so much. Thank you so much for watching this video. Meet you soon in product costing question and answers video. Thank you so much.